Before 1863, there were no national banks in America. That's the official line, the one printed in textbooks, the one repeated in financial history courses without much examination. And most people accept it, because why wouldn't they? It sounds clean. It sounds complete. But when you begin looking at what was actually built across American cities during that period, the official line starts to feel less like history and more like a summary that skips something important. Because the buildings were already there, long before 1863. Stone structures with columns rising 3 stories high, vaulted ceilings engineered for permanence, fireproof iron vaults set into foundations thick enough to survive generations. Architecture like that doesn't appear overnight. It doesn't emerge from a fragmented, improvised financial system. It takes decades of planning, capital, and intent. So the question worth asking is a simple one. If no centralized banking institution officially existed before 1863, what were these buildings for? Imagine walking through Philadelphia in the winter of 1840. The streets are cold, the fog sits low between the buildings. You turn a corner and stop. In front of you stands a structure that looks less like a commercial building and more like a Greek temple. White marble steps lead to iron doors. Thick stone walls rise on either side. Above the entrance, carved into the stone, a single word, exchange. But exchange of what, exactly? And who authorized this? Who funded it? Buildings like this cost more than most city governments could allocate, and yet there it stands, permanent, deliberate, unapologetic. This raises questions that most financial historians pass over quickly. The standard explanation offers 2 answers: state-chartered banks and merchant houses. And at first this seems normal, reasonable even. State banks existed, merchants operated trading networks. But look closer at those terms and something starts to feel thin. They're broad, almost deliberately so. Merchant house can mean almost anything. It explains almost nothing about the scale of what was constructed or the coordination required to sustain it across multiple cities simultaneously. And this is where the explanation starts to fall apart. Because the physical evidence doesn't match the described system. The buildings, the city maps, the early commercial ledgers that do survive, they point towards something more organized than scattered state charters, something that operated with consistency, with long-term thinking, with infrastructure that assumed it would still be needed decades into the future. Something doesn't add up, and the more carefully you look at what was built before 1863, the harder it becomes to accept that no one has fully explained who built it and why. The accepted history goes something like this. Before the National Banking Acts of 1863 and 1864, America operated on a decentralized financial system. Individual states issued charters to private banks. These institutions printed their own currency, paper notes backed by little more than confidence in proximity. Historians sometimes call this money wildcat currency, named, some say, because these banks operated in territories so remote that only wildcats lived nearby. There were thousands of these institutions scattered across the country, small, unregulated, printing notes that lost value the moment you crossed a state line. On paper, this explanation sounds complete, a messy, fragmented system that eventually required federal intervention to stabilize. At first, this seems entirely reasonable, a young nation finding its financial footing through trial and error. That's the story, and for most people it ends there. But here is where the first doubt appears. If the pre-1863 system was truly that unstable, if banks were collapsing every few years, if currency was essentially local and unreliable, then something in the infrastructure record simply doesn't fit. Picture the Erie Canal in 1825, 363 miles of engineered waterway cutting through upstate New York, completed over 8 years of continuous construction. The final cost exceeded $7 million, an enormous sum for that era. Now ask the obvious question, who held that money? Not for a week, not for a season, for years. Wildcat banks with unstable notes and no interstate authority couldn't anchor a project like that. The math doesn't work. The timeline doesn't work. And the Erie Canal wasn't the only project. Railroads, port expansions, river channeling operations, all of them financed somehow across years through a system that was supposedly too fragmented to function reliably. And this is where it gets strange. The records that should explain this coordination, the ledgers, the loan agreements, the capital transfer documents, are either missing, incomplete, or filed under administrative categories that financial researchers rarely examine closely. Some archives from this period were lost to fires, that's true, but not all of them. And the gaps appear too consistently across too many cities to feel entirely accidental. Something coordinated that capital. Something tracked those funds across years of construction and disbursed them with enough reliability to complete projects that still stand today. The official explanation points to state banks and private merchants, but that answer raises more questions than it resolves. Because somewhere between the wildcat currency and the completed canals, there is a mechanism that no one has cleanly identified. And that missing mechanism is where this story becomes genuinely difficult to explain. Look closely at photographs taken in American cities between 1830 and 1860. Not the people, not the streets, the buildings. Because once you start examining the physical structures that survived that period, something quietly unsettling begins to surface. In cities like Baltimore, Boston, New Orleans, and Cincinnati, architectural historians have cataloged dozens of structures classified as commercial exchanges or mercantile halls. Those labels sound ordinary, functional, but step inside the floor plans and the ordinariness disappears. These weren't modest counting houses with a desk and a ledger. They had full rotundas with natural light filtering through skylights engineered for interior illumination. Reading rooms that stretched the length of cathedral naves. Underground storage chambers with ventilation systems drawing air through brick channels. Infrastructure that, frankly, shouldn't exist at that level of sophistication for that period in American construction. And this is where it gets strange. Some of these buildings have no clear construction record at all. Not incomplete records, not damaged records, no record. The land deed appears in the city registry. Then the building appears, fully standing, fully operational, and the gap in between is simply empty. No construction permits, no named architect on file, no payment ledgers connecting materials to labor to completion. For a structure requiring years of skilled work and significant imported materials, that silence is difficult to explain away as simple administrative oversight. At first, this seems like an understandable failure of early record-keeping. Cities were disorganized, courthouse fires destroyed entire archives. That explanation is reasonable, until you notice how consistently this pattern repeats across multiple cities that had no connection to each other. One particular building in New Orleans tells this story most clearly. Documented during Reconstruction-era municipal surveys in the late 1860s, its surviving floor plans show something beyond a standard commercial space. Multi-level ledger storage rooms, a ventilated subchamber with reinforced walls, and a separate room, small, interior, windowless, labeled only with the word settlement. No charter document names this building's purpose, no founding record identifies its operators, no named owner appears in any available source from before 1855. The building existed, the function is implied by its design, but the institution behind it left almost no trace. The standard explanation points to record loss and administrative gaps, but the buildings themselves survived, solid, intentional, built from materials selected for permanence, not convenience. And that detail doesn't fully make sense if these structures served only temporary or informal financial arrangements. Something designed to last generations suggests an institution that expected to last generations. What that institution actually was remains for now an open question. Once you start looking for the pattern, you see it everywhere. And once you see it, it becomes very difficult to explain using the official history alone. In 1837, a financial panic swept across America with unusual speed and force. Hundreds of state-chartered banks collapsed within months. Storefronts closed, wages stopped. Currency that had been accepted on Monday was refused by Friday. Imagine the exchange floors of New York and Philadelphia in the autumn of that year. Rooms that had been loud with transaction and negotiation suddenly emptied. Ledger books closed mid-entry. Ink barely dry. According to the standard historical account, this collapse was the clearest possible proof of how broken and fragile the pre-national banking system truly was. A decentralized, unregulated network of small institutions that simply couldn't hold under pressure. That's the explanation. At first, it seems to fit perfectly. But here is the timeline issue. Within 2 years of that total collapse, by 1839, large-scale lending had quietly resumed. Construction projects that had frozen mid-frame were restarted. International cotton markets, which required coordinated credit across 3 continents, were functioning again. Ships were moving. Contracts were being honored. 2 years after what historians themselves describe as a complete systemic failure. No national bank existed during that recovery. No central coordinating authority was officially in place. And yet, capital moved with enough reliability to restart an international trade network. That doesn't happen through improvisation. That requires infrastructure, existing infrastructure, the kind that doesn't disappear just because the visible, chartered layer of the system publicly collapses. Some historians point to merchant banking networks as the engine of that recovery, and this is where the explanation starts to fall apart. Because when researchers actually attempt to trace those networks, locate their offices, name their principals, find the transaction records that should document their role, the trail goes thin almost immediately. Not gradually, almost immediately. A few names appear, a few partial ledgers surface, and then silence. For institutions supposedly capable of stabilizing an entire national economy within 24 months, the documentary record is remarkably sparse. And this is where things don't add up most clearly, because the pattern doesn't appear once. The Panic of 1819 produced the same timeline, collapse followed by recovery that moved faster than the visible system could explain. Then 1857 repeated it again. 3 separate financial collapses, 3 recoveries that outpaced any documented mechanism, 3 sets of records that go quiet precisely where the most important coordination must have occurred. That is not coincidence. That is a pattern. And patterns this consistent usually point towards something that was never meant to be fully visible. So what was actually operating before 1863? That question has been sitting at the edge of this investigation from the beginning. And the honest answer is that several theories exist, none of them fully satisfying, none of them completely provable, and none of them entirely dismissible either. The first theory points to private clearinghouse associations, informal networks of merchants who quietly settled debts between institutions without public record or government oversight. These associations did exist, that much is documented. But here is where the explanation starts to fall apart. The ones researchers have actually identified appear far too small, too localized, too limited in reach to account for the scale of capital coordination visible in the infrastructure record. A regional merchants association doesn't finance 3 decades of interstate construction across a continent. Something doesn't add up. Others point further across the Atlantic. Some researchers argue that European banking houses, Rothschild, Baring Brothers, and several less prominently named institutions, were operating through American agents in ways that never appeared on any official ledger, moving capital quietly, settling transactions through intermediaries whose names surface briefly in correspondence and then disappear. There is partial evidence for this. Letters, indirect references in commercial records, amounts that appear in American construction accounts with no clear domestic origin. But only partial evidence, enough to raise the question seriously, not enough to close it. And that gap between the partial evidence and the full explanation is where the doubt lives most comfortably. A smaller group of researchers takes the argument further still. They suggest the physical infrastructure itself, those exchange buildings, those vaulted settlement rooms, those ventilated underground chambers, points toward a system that doesn't begin with the American Republic at all. A financial architecture, they argue, that was inherited rather than invented, adapted across generations, rebranded when necessary, but never actually dismantled. At first, this seems like an extraordinary claim, until you stand inside one of those pre-1863 exchange halls and look carefully at the construction. The marble worn smooth by decades of foot traffic, the iron vault doors still hinged, still operable. The settlement room interior, small, windowless, sealed. Whoever designed that room wasn't thinking about temporary arrangements. The National Banking Act of 1863 is presented in history as a beginning, the moment American finance became organized, became real. But maybe that framing has it backwards. Maybe 1863 wasn't a creation, maybe it was a formalization, a public label placed carefully over something that had been operating quietly and continuously for a very long time before anyone thought to write it down, or before anyone was permitted to.